Yes, Jesus. No.
Okay, perfect. Okay, thank you, Tascha, for accepting our invitation. But let me do a little introduction about this project. Personally, I often find difficult to explain the DeFi phenomenon because I have worked in finance for a lot of years. I have a lot of finance colleagues, but when we start presenting what we are doing, we figure out this kind of fresh, cool image like Harry Potter and this kind of fresh, cool image. But the thing is, behind this image, there is like one of the most innovative projects in the space right now. And if you visit the Tascha profile, you will see that have an impressive, really curriculum. You have studied in Berkeley, also have working for consultancies like EY, Deloitte, even for private banking firms like Jeffries. Let me correct if I am wrong. So we are probably one of the most demanded profiles in Wall Street. So you are probably, so my first question is, why motivate you to, with this profile, to move to crypto? Because you've been working for a lot of years, probably Wall Street is very, very well space that are demand profiles like you. So what do you see in that space to move to that?
Mm-hmm. So a number of things. One is that I like finance to begin with. I studied economics at UC Berkeley, and as you mentioned, I worked in a number of financial roles, from interning to full-time at Jeffries in investment banking. So that has always been what I'm interested in. And then I also was really interested in technology when I went to UC Berkeley, you know, in the Bay Area, and a lot of tech startups coming out of there. So, you know, starting more and more to go into a technology realm. So when I started out in investment banking in San Francisco and then in London, while I was in financial service, I was covering tech companies. So tech companies in the US, tech companies in, you know, Europe and Middle East. And pretty much from there, I see a lot of, you know, overlap between tech and finance for sure. But I still wasn't that interested in fintech yet. I think it's mainly because of the limitation from regulatory that's blocking the growth and a number of things, right? And one of the area that I really want to push forward to is financial inclusion. And once I got, you know, to learn more about blockchain and DeFi, I really see that DeFi is the place where we can really move and drive financial inclusion on a long term and really a scalable way to do so too. So pretty much now that I'm doing Alpha Finance, while it's, you know, very tech, very blockchain and very, you know, cutting edge technology, it's still financial products. So a lot of the things that we build are adapting and applying from financial products in traditional finance and make it better to not only include everyone, but also to offer a superior financial product offerings.
Yes, but we are talking about technology, but really we need a very solid background, financial background. But we are going to talk about collateral, we are going to talk about leverage. So it's really more difficult, in my opinion, to understand the concept of your project from. So it's more difficult the finance part to understand than the technology part, because you are really building financial products that are sometimes complex to understand. Where are your position, where are your heads, where you're supposed to. So I think, yes, we are talking about debts, but in that kind of project, I think people usually need to know more about finance. Don't you think so?
Yeah, I think a combination of them would be great. And that's why, you know, one person cannot run the whole company. Nipun, who is our co-founder, he brings a lot of, you know, quant and computer science background. So he went to MIT, double major in undergraduate and master's in MIT too. He also won 4 gold medals and 1 silver medal from the International Mathematical Olympiad. So, you know, that's why we bring a number of skills on the table. So even though I don't code, I still understand, you know, concepts for sure on smart contracts, on blockchain, what can be done, what cannot be done. And pretty much I bring more on the market side in a sense of what products should we build and how would that bring synergy to each other products that we already have. Let's say for Alpha Homora, what's the next product should we build, which is Alpha X, and how can we connected together to make sure that the whole ecosystem of Alpha products will generate the best synergy to our users. So I think definitely, technology is really, really important. But if we are only focused on technology, then I think the team or any team can spend too much time building innovative solutions that may not have adoption, that may not actually, no one wants to use it. So I think it has to be an innovative solution that we also know and validate that the market wants to use. And I think Alpha Homora is a great product to give an example of that.
Okay, I would invite you to do a little interview of the project, of all the functionality, and we can ask you all the questions inside of each page. So
sure, yeah.
If you can share, I don't know, I can share, but if you can share if you have an account in order to show Alpha Homora, or I have also.
Yeah, I can share too.
Okay. So first of all, I think one of the proposals here is probably capital efficiency is one of the things. No, you have capital and you can really be more efficient in capital. That's one. And the other thing is the amazing right now interest that the platform right now is providing. So first of all, all the people is right now know a lot about AMM. So we can start probably with the farms pool, to understand what are the leverage.
Mm-hmm. Yeah, so pretty much, and these should be updated soon. I think it's the graph that's loading up. Let's see. So what we're seeing here are pretty much a number of pools, right? And these are different AMM pools on Uniswap and SushiSwap. What we do on top of that is that we allow users to provide liquidity or yield farm for the pools that have farmed tokens with leverage. So what that means is that, typically if you were to go to SushiSwap and supply ETH and Sushi, you would get Sushi token, right? And also the trading fees for supplying liquidity to the AMM pools. For Alpha Homora, you can do that by taking more leverage. And what that means is that you are going to borrow from Alpha Homora, and Alpha Homora is going to yield farm on behalf of you. And so let's say, if at first you start out with 1 ETH, for instance, and then I click 2x, what it is doing is Alpha Homora will borrow the ETH on behalf of you. So now technically your position is entering into 2 ETH, and then Alpha Homora would then take these 2 ETH, swap some of it to be Sushi, so that you actually have both to supply to the AMM pools. And then after that, you will get the trading fees and the Sushi rewards, the yield farming rewards, as if you supply 2 ETH, right? When in reality, you only have 1 ETH. So this is where the leverage comes in. This is different from if you were to do this yourself manually by lending the ETH to, let's say, lending protocol, and then you borrow some ETH out. You will not actually get 1 ETH out, because for lending protocols, you would have to over collateralize. So let's say you lend 1 ETH, you would be able to borrow only like 0.7 ETH out. But for Alpha Homora, it is not an over collateralized, because Alpha Homora is taking custody of the assets on your behalf. So that's why you're able to, supply 1 ETH and then also borrow 1 ETH to yield farm.
About that question, one of the questions about that is, we are in some way shorting ETH, because in some way we are asking ETH and we have to return it. So don't you think that this stay short on it could be also, you have to manage that, because in some way, if it goes up, you are earning for sure a lot of more trading fees, a lot of more trading funds, but you have to compensate with this short position.
Mm-hmm. Correct. And that is why we are also building Alpha Homora V2 that will accommodate this kind of situations as well, to offer more options for our users. And I'm going to share more with our community in terms of, what Alpha Homora V2 is going to offer in the coming weeks. But the point that you mentioned will already be addressed with Alpha Homora V2. So the users will be able to have the option to not short ETH while still be able to use Alpha Homora. So that will be in place. And another thing that you mentioned is also more on what people want, in a sense of they want to minimize the downside risk while still maximize the yields, right? And this is what we saw as a huge market gap as well. When we launched Alpha Homora, as you mentioned, some of the positions would be exposed to shorting ETH. A lot of people are saying that they want to enter to market neutral leveraged position. What that means is they want to not be exposed to short. They want to open the opposite leverage long on ETH. So they are, if you look at the leverage part, they are at market neutral. So they are not exposed to the shorting ETH effect while still getting the yield farming APY. So when we saw this market gap, what we are looking to do, which we have started, is to build another product, which is called Alpha X, to also capture this market. And Alpha X will be in the perpetual swap product that will also work with Alpha Homora to help minimize the downside exposure.
So that it's amazing the return or the profit that you can get from the pools. Do you think that will be the future? Or what do you think right now we have so much return from that pools? Is because there are not so much capital? Do you think in the future will be the same? Or
could you repeat your question again?
Yes. What do you think we have? So these returns are really amazing. The returns at the pools, the yield, the trading fees are really amazing. These fees. Do you think this is normal? Do you think this will continue in the future? Or what do you think? And what do you recommend? What to select one of these pools? What do you recommend to select?
Okay. So for your first part of the question, in terms of if I think these yields are sustainable, if you look at the trading fees, these actually, quite make sense, like 7% for a year. And these are major pools, and it can go up to, some of the pools are lower, and some of the pools are higher. Let's say for like Keeper, it's actually pretty here. Okay, it's actually like 171. So there are some pools that from trading fees alone, the APY is high. But I think that the yields will continue to be around here or even lower. And that is why there is so much demand for a product like Alpha Homora, because those who are searching for more yields, they can do, and they can get the higher yields from taking leverage. So these are like, without Alpha Homora, this is the APY that you'll be getting, like 47%, 20% for ETH USDT, 20% for ETH USDC. So it sounds more manageable, right? But there are still a lot of users, a lot of farmers who are looking to find more yields. And that's why they come to Alpha Homora to get that. So I think the range of yields that we're seeing in terms of trading fees itself, I think it's actually at a place where it's quite sustainable. In terms of the yield farming itself, I think there will be two things that's going to happen. One thing is that the projects that have been continuing their yield farming, they will eventually decrease the numbers of their giving out the tokens. And as a result of that, there's going to be more demand for Alpha Homora again, because people who are looking for more yields will continue to use Alpha Homora to take leverage and get X times more of the yield farming APY, right? And the second part would be when new projects come out, they will also find more ways to bootstrap their liquidity in AMM pools. So let's say like Index Co-op, they are also bootstrapping their ETH DPI pool by giving index, and then more projects are doing that. So once we launch Alpha Homora V2, which is also going to support more AMMs, so not just Uniswap or SushiSwap, then we can accommodate quite a lot more yield farming opportunities. So that's the first part. Your second part of your question is more of, which pool would I suggest? I think this really depends on your risk appetite and also which assets you hold. So you can look at this status page, and you will see how much of liquidity is allocated to different pools. So you can pretty much get a sense on which pools are popular from looking at these TVL, and these are in ETH. So you can see that the stablecoin ETH USDC is pretty popular. The wrap BTC one is also pretty popular. And there are a number of them. So I think just depending on what tokens you have, and also which tokens you want to have too, because when you close a position, let's say if you supply only ETH, when you close a position, you will have the option to receive everything in ETH or receive both tokens back. So depending on what your preference is.
Okay, well, one question. If you have, usually people have in the investments Ethers and have Bitcoins. So it's no-brainer to have the pools, the ETH and the Bitcoin, the pools, and also to leverage on that. So that's it's like a superpower, a way to really increase your assets, because there are not too much divergence between Bitcoin and Ethereum. So you see a good option really to leverage on the two assets that people usually have, that is Ethereum and Bitcoin. Do you think it's a good option?
Yeah, definitely. And also price correlation between Ethereum and Bitcoin is pretty high too.
Yeah.
So that means that you are not as exposed to impermanent loss as if you were to provide liquidity to, let's say, ETH and stablecoin pools.
So that's so with that, what you will do is you have Ethereum, Bitcoin, and you will get get some of the ETH to put this. So what you will done in that case? So you get your ETH, you put in here, you leverage on that the two assets. No, that would be the way to do it.
Correct. Yeah. So pretty much it's pretty simple. Once you click on ETH wrap BTC, there are going to be two wrap BTC pool. There are actually one that's on Sushi Swap, which means that you are also getting sushi because it's a part of their liquidity mining program. There's another one which is on Uniswap, which there is no Uni token given out. So that's why you will see the APY for Sushi, ETH, wrap BTC being higher. So let's say if you select this Sushi Swaps, ETH, wrap BTC, you can decide how much you want to put in terms of ETH, how much you want to put for wrap BTC. You don't have to have both, but what will happen is you're going to see below, for instance, if you put 10 ETH, you will see that, okay, asset supply is 10 ETH, 0 wrap BTC, but then it's going to swap some of this 10 ETH to wrap BTC for you because you would need to have both to supply to the AMM pools. So you also see, if this number is something that you're going to be okay with. And if so, then you can select the leverage as well. So this will also determine on how much debt you're borrowing. And then after that, you can just click farm. So it's pretty simple on the front end side. Okay,
perfect. In that case, if WBTC goes better than ETH, you also are more your position is more profitable. I understand. Correct. As you are getting debt from ETH. Okay.
Yes.
So if anyone have a question, it's time to do it. I don't know, Luis, ready? So for me, really, it's really amazing. I think there was a market in Aave that permits you to let some pools like a collateral. It's the more you are right now working with Aave, no? In that
yeah. So you brought up a good point. This is actually another market gap that we saw that can be built out very quickly, and we just work with Aave and ship something out pretty fast. So what we saw is that there is a gap between the borrow interest rate you pay if you were to borrow ETH from Aave and the lending interest rate if you were to lend your ETH on Alpha Homora. With this number right now, you can already see that if you borrow the ETH from Aave to lend on Alpha Homora, you would already get this 6 more % gains.
So you are arbitraging the interest rate between the two
correct.
platforms.
Yes, and we allow it so that users can arbitrage very easily without having to go back and forth between Aave and Alpha Homora. So if you already lend on Aave, you would see the collateral value already showing up on here. So you can skip this first step for depositing the asset on Aave and using it as collateral. So you would enter into the second step by clicking next, and you would be able to borrow the ETH from Aave. Depending on your collateral value, it would depend, it will tell you like how much you can borrow from Aave, and then you would have to pay the in this case, 1.3% for Aave. And then after that, the last step, it would allow you to confirm that you're going to lend ETH on Alpha Homora. So that's pretty, 3 simple steps without you having to go back and forth. If you don't have assets lent on Aave yet, you can also lend through this first step. So these are all the lists of assets that Aave supports as collateral. And these are all the interest rate that you would get from lending these assets on Aave. So you can decide, depending on these, which one you want to use and lend and use as collateral. And then once you enter it and go to the next step, it will automatically lend this to Aave for you and then use the asset lent as collateral so you can borrow the ETH from Aave.
So in that case, let me clarify this. In that case, if you have $1,000, first of all, you are having the return on Aave. That is right now like a 3% or more. So you have a return of the interest rate of the Aave. So first of all, you can lend up to 70% in Ethereum that you can arbitrage with the interest rate of your platform. So you are also taking 7% probably less because you have probably to take care of the margin. No, in some way, in that case, you have to take care that the margin or you lend less than you can. The margin call didn't go, no, because you have. So you have to have like a margin in order not to be liquidated, no, as I understand. So probably you are right now arbitraging in the 60% probably of your collateral if you want to be safe. So right now you are like in the 10%, you have the DAI interest rate in Aave, and in the other 60% of this amount, you are arbitraging, or you are having a 7% right now, more or less, no?
8.7 lending rate.
Yes, so you are the arbitrage. So
the gap.
So it's amazing because you are you are like having from more than half of your amount that you are right now lending in Aave, you are having an extra interest in Ethereum. So okay, it's amazing. About, I don't know if all the people understand that because okay, about that. I am right now earning interest in Alpha, but how can you see the final interest rate? Because as is a formula or it's algorithmic, it changes time to time. Is there any way to see the final interest rate at the end of the day, or at the end of the week? How can you?
So that is because we run everything, every second, and these interest rate take into account every single block on Ethereum. It's going to be, pretty hard to predict what's going to be the rate end of the day, what's going to be the rate end of the week. But pretty much the interest rate that you see now is variable. So it is this rate that you're getting at the moment. It went up to 25% last night when utilization rate was about 94%. So depending on.
Do you have the past performance, or did you have in
I see.
past performance the last day or something that you can really get this number to understand what was the final interest rate the last day?
I see. So no, we don't show that on the front end yet. And it's something that we can show for sure. It's a data that we have on the graph, which is the protocol that we use to run the numbers on the front end. And if there is a lot of demand for our users to want to have us visualize that graph, then we can do it for sure.
Because I think yesterday it was like all the interest rate about, it was around 15 all the day, or almost all the day. I was checking, and it was really a very big interest rate, no?
Correct. Yeah. Last night here in Thailand, which is probably your early morning, the other day was about 25%. And then once people saw that 25%, a lot of lenders come in and lend, and then continue to decrease the interest rate for lenders down from there.
Because right now you are in some way competing with the staking if 2.0, no? You are right now, sometimes you are even giving better rates than even the staking, the ETH0 staking.
Yeah, I think it depends on what you want to put, or like where you want to put your ETH to work. So the market offers multiple options for sure.
What do you expect in terms of the volume that you can really, with this interest rate that is very, very attractive? I assume that capital is going to flow to your application. Right now you have like 80 million in really not too much time. So you are growing a lot. I think we are one of the project that is growing more in the last month in DeFi.
Yeah, I think the volume will continue to grow, definitely from Alpha Homora V2, because we're going to support multiple AMMs. So that means that, you know, these pools that we're able to support will be like 3 times from here, because there are a lot more pools on the other AMMs that we are also going to support. And also from another functionality on Alpha Homora V2, which will also allow users to don't have the option to, you know, short on ETH. So you can actually use Alpha Homora while not being exposed to that shorting on ETH. So I think that will also bring more users to use Alpha Homora. And these are just a few of, you know, teaser of what's coming up for Alpha Homora, but there are a lot more functionalities that we really think will help expand the user base for Alpha Homora.
Can you explain a little bit the yield, the alpha rewards, right? Because I think you have a first month that it ends on, I think, 16 probably of December. That is where like a first, one of the first rewards, but for the pools. And you have also rewards for all these pools, because you are rewarding right now the alpha pools, no? Why are you, what are the motivation to reward these alpha pools? What do you think is interesting to use the alpha pools that you have alpha, that is your token? If you can explain a little bit more about the token, and also the interest-bearing Ethereum.
Okay, so a lot of information to share on that. First point is that we are giving alpha on 2 levels. So first level is those who open leverage position of more than 1x will also get alpha rewards. At first, it was supposed to end on December 12th, but we are extending it to another month, to January 12th. So that's the first way of earning alpha. Another way of earning alpha is this alpha pools that you mentioned, which is for any liquidity providers who are providing liquidity to this IBE alpha pool will get alpha in a form of high trading fees. So we are doing several trades to make sure that the fees that we are paying to the liquidity providers are equal to the number of alpha that we allocate to give to these alpha pools. So by supplying liquidity to this IBE alpha pool, if you only have ETH, you can do it too, because we would automatically convert for you. Or if you already have IBE, then you would select this second pool accepting IBE alpha, and then it would ask you to supply IBE and alpha, or alpha, depending on if you want to go through slippage or not. And then the alpha that you will get will be in a form of trading fees. That means that you will get it when you close your position. So it is not some alpha tokens that are airdropped to your wallet. So it will be different from typical liquidity mining program. And the reason that we do this is a number of reasons. One is that we wanted to, have alpha on Uniswap anyways, right? But instead of having alpha be paired with ETH, why don't we pair it with IBE? Because that means that a lot of users who want to supply liquidity on Alpha Homora, to supply liquidity to this IBE Alpha, they would have to use Alpha Homora. So if they already lend on Alpha Homora, by lending the ETH, they would automatically get IBE. So IBE is similar to CETH in Compound, which is interest-bearing ETH. And pretty much once you lend your ETH, you would get this IBE that you can further take to supply liquidity on Alpha IBE pool to get even more APY from that. So this way of giving Alpha to IBE Alpha pool is not only allowing users who hold Alpha to supply liquidity and pretty much help bootstrap liquidity on IBE Alpha pool, but also allow more users to come in and lend ETH on Alpha Homora too, because they would need that IBE to be able to supply liquidity.
What will be the Alpha token? Can you explain the economics or the utility of the governance? Because I think you explained in an interview that it was a governance. What will be decided with this token? Yeah, sure. So, we are pretty early in our stage in terms of the project wise and also what our vision is going to be. And, we're working towards the vision, right? And Alpha Finance Lab vision is that we are a cross-chain DeFi lab. So we're going to build a number of DeFi products. Each product will solve its own problem, will have its own, target users that we're looking to capture. Let's say like Alpha Homora has its own, Alpha X, which is in the perpetual swap trading, will have its own market and users. But all of the Alpha products will work together to achieve one main goal, which is to maximize returns while minimizing the downside risk. So, which is why we are building Alpha X to work with Alpha Homora, and Alpha X will allow users to minimize the downside risk, while Alpha Homora will allow users to maximize the returns. So in a sense, you would be able to really pretty much earn more yields while not having to be exposed to that much risk. So when now that you understand the vision of Alpha Finance Lab, you can see that we're pretty early in the stage. And in terms of the governance token, right now, the utility is governance. But once we grow more in terms of the product usage, in terms of the product offerings, and also in terms of the project itself, there are definitely going to be a lot more utilities that we're going to add. And we have come up with a number of utilities, and it's just a matter of the time of when we're going to implement. One example of the utility is what we call security token, in a sense that if you have Alpha token, you would be able to stake on, let's say, for instance, Alpha X, and you would be able to help Alpha X be more secured in exchange for the trading fees that Alpha X makes. So that is one of the example, which we call security token. Another example, which would come later down the line, is what we call work token. What that means is that if you have Alpha, you would be able to use our Alpha product better. So for instance, there are going to be in the future, let's say, a number of functionalities on, for instance, Alpha Homora V2, on Alpha X, or even more Alpha products. And you would be able to unlock those functionalities if you have Alpha. And if you don't have Alpha, then you would be able to use the basic features. So these are some of the examples. And of course, it really comes down to when we want to implement it, not so much on like if we're going to implement it. Oh, should you define in some way like a new kind of hedge fund or new kind of financial product suite? So how do you define your product? I understand as a financial product for having return in some way. No? So there are new kind of hedge fund. Oh, can you repeat your question? Yeah, again? It's some way you are as new kind of hedge fund or new kinds of funds. How do you define? So you are really offering financial product with the best return, with the loss. So this is, you are competing with funds, traditional funds. We are competing with probably with YR. We are competing. Where are you in the ecosystem? So I think they're pretty interesting how you look at competitors, right? And now when you think of DeFi's landscape, you will know that it moves really fast. So who we think are the competitors now may not be our competitors,
may even be partners next week. And then eventually the real competitors might just come out from a new project, right? What we like to think as Alpha Finance Lab as a whole, we think that, each particular product will have its own competitor or, competitive landscape for sure. Let's say for Alpha Homora, it's more on, yield aggregating platforms. And then for Alpha X, it will be more of perpetual swap platforms, right? But if you look as a whole for Alpha Finance Lab, I don't think there is any project at the moment right now that we see as competitor yet, because a lot of times, a lot of the projects are focusing on one particular area. So each project is born to solve one problem, to capture that one market, while Alpha Finance Lab as a whole is looking to not focus on that one problem, but pretty much on the whole theme of maximizing returns while minimizing downside exposure.
And what do you expect from a community like us, a Spanish community that can really integrate in your project? What do you expect from this in terms of the government, or in terms of we as an investor for sure, because we are offering a very good product? But what do you expect a community can really add or collaborate with your project? What do you expect from these governance properties?
Yeah, so a number of things that we are bootstrapping internally, and then hopefully it's going to be a process that we make it more public, is we want to have our community to communicate and pretty much contribute in any way that they can. So if you know how to code, you can pretty much come in and find a way to, help improve the UI, or even help improve the front end, or even, come up with a new product. If you know how to write, then maybe you help us write with documentations, or even explaining. If you're good with graphics, then you help with memes, So there are a number of things that we are looking for our communities to help for sure. Right now, we're setting up that process for now to make sure that it's something that is scalable and it's efficient. So when we have it roll out, then it's something that we can also help maintain from internally too. But in terms of the governance purposes wise, there are going to be a number of votings that we will continue to do. So far, we only had one voting, not a lot, but we are getting started, and we are looking to continue to have more votes once we launch more products and adjust the parameters.
I don't know if someone have any question, because we are. Thank you very much for explanation. I think it really congrats for the projects. I think it's really amazing ideas, and I think we are going to launch a lot of things. So we expect a lot of news from your side. So I don't know if someone have any question. Alex, Roberto. Sometimes it's Franklin. I don't know if you would. Well, we have here some investors. We have Alpha in the farms. So I don't know if sometimes it's difficult to ask this.
Okay. Hi everyone.
Yes, Alejandro.
So thank you for your explanation. So I have a question. Imagine that I would like to explain your project in an easy way to someone that is not related to this ecosystem. How do you think should I approach the idea with him?
So to clarify my understanding, there are some projects that are looking to work with us, and then you wanted to.
No, I mean, imagine that I have a friend who is outside of this ecosystem, crypto ecosystem, but he's a financial guy, okay, from traditional markets. So how do I have to approach him in an easy way to explain Alpha Homora that is quite complex, to explain in less than a minute? That's my question. How should I approach him?
So I think you can explain AMM pools first, because that's the base layer that we're built on top, right? And then when you explain AMM pools, you would then also have to explain yield farming. I'm not sure how it can be kept under 1 minute though. Once you explain yield farming, then you can explain Alpha Homora.
Okay, thank you. And congratulations for your product. It's awesome. We are already investor. So because that helps us to make different strategies to find that balance in our portfolio. So awesome. Thank you.
Yeah, no problem. Thank you too.
Any other question? I know. So another question, Tascha, are you, right now we are talking a lot about ETH or liquid ETH stake. Are you planning in some way to move from ETH to liquid ETH stake it? Or what do you think about that? Because right now they're going to be like a competition, but this can add returns on the liquid ETH. What do you think about that?
So I think definitely that is also where people can park their ETH for sure. And that is why once we launch Alpha Homora V2, we're going to expand the level of leverage, or like the assets that people can take leverage of beyond ETH. So we're not relying only ETH. And we also want to show support to ETH 2.0 and make sure that users have options to go to stake ETH for 2.0 as well, if they want to. But in terms of with the current product offering, I think it comes down to what you value as well. If you really care about yields, or if you really care about ETH 2.0, so I think it's more on the personal preference too. And at the same time, you may also split your risks or split your portfolio, some on Alpha Homora, some on ETH 2.0 too. So I think it really depends on how you allocate your assets for sure. But on a long-term vision, yeah, we're going to expand beyond ETH. So we're not putting our position to only rely upon ETH lenders.
Okay, so you are, because usually people lend in stable coins. It's the usual, the most lending crypto asset is usually stable coins. But anyway, yeah, it's important that you can to expand this capital, because in some way, in order to attract capital, we have to have more assets on space.
Correct. Yeah.
Okay. I mean, we have here a question. Okay, no, it's the same. I think Alex is doing the same about liquid staking. Have you seen these tokens that is like S stake or DA? There are some tokens that are representative.
Yeah. So we also talked to Lido, who is another project that we also respect, and they also have stake ETH token. So we are also working with them and pretty much seeing how we can collaborate. And pretty much even though it's not direct integration or anything, we just want to provide support to staking ETH and also the growth of ETH 2.0 too. So that's something we're exploring. Yeah.
Okay. And one of the last question, I have no any other question.
May I ask you something?
Yeah, yes, sure, ready.
Hi, Tascha. Thank you for your presentation. Very interesting. I wonder if you internally have some conversation about other layer 1 protocol, for example, Polkadot or something similar. That you are implementing the virtual machine of Ethereum, so it could be easy for you to migrate in some cases. So how do you envision that part?
So for Alpha Homora, it's on Ethereum. For Alpha X, it's also going to be on Binance Smart Chain, so both Ethereum and Binance Smart Chain. And the reason that we are looking to launch Alpha X on both of these two chains before other chains, because of a number of market gaps that we are looking to capture. So for Alpha X being launched on Ethereum, of course, that's going to capture the DeFi users and the market gap of perpetual swap trading in DeFi. So that's different from the gap that we see on Binance ecosystem. We see that Binance ecosystem has a lot of traders in hand already, and a lot of these traders are on centralized exchange. So the gap is pretty much, they already trade perpetual swap, and when they want to migrate to DeFi version of perpetual swap, which is on Binance Smart Chain, which is the ecosystem they're used to, since they're trading on Binance and they're in the Binance ecosystem already, then they would come to our product, Alpha X, on Binance Smart Chain. So even though it's going to be deployed on both, it's actually capturing different kind of users and traders. So I think that would be pretty interesting for us to see how that would be play out. And then your question with regards to Polkadot or other chains, I think for us, we are also looking closely with these other chains and also evaluating all the options out there. They're a very interesting one, even Cosmos, and also other L2 solutions. So I think it comes down to which of the ecosystem do we find best in terms of the adoption and also the growth in DeFi, particularly in that particular chain. So yeah, it's something we're evaluating. And also once we decided to expand into, we're probably going to expand to multiple chains as opposed to migrating everything to that chain.
Thank you, Tascha. I noticed some trends on your words, focusing on Tendermint protocol instead of on Substrate, right? You mentioned Binance chain, that is Tendermint. You mentioned Cosmos, but you mentioned very lightly Polkadot. So may I think you are more focusing on Tendermint networks than Substrate?
Actually, no, because Binance Smart Chain is EVM compatible. So it's pretty much similar to Ethereum.
Okay, well, in Binance chain there are Tor room. That is the AMM in Binance. I don't know if you have studied that, but Tor chain is like an AMM in Binance.
But Binance chain is a Tendermint chain.
Yep, but they also have Binance Smart Chain. The name can be similar.
Okay.
Yeah, and Binance Smart Chain is the one that is EVM compatible.
I see. Thank you.
How can we join to this Alpha X? It's possible to join to the test or the test environment, or to do that tester of the Alpha X, because I see.
Yeah, you can sign up for the beta private testnet. So let me share the link here.
That would be great. Okay, I don't know if you have any other questions. Thank you very much. That's really amazing. We will hope to join to your community in Spanish, a lot of people, but we will try to translate all the things. What I see is that in Binance, there are another AMM, there are another Uniswaps, but you are only talking about leverage or understand the perpetuals.
Yep, it will be perpetual swap trading, so not decentralized spot trading. So it would be leveraged long or short of any asset.
Okay, so I don't know if you have any other question. Here is the link to join to the Alpha X test. That for sure will be interesting to see what you are doing. Most before Alpha Homora, that was amazing. Probably you are doing a very good job on Alpha X. So I don't know if any other have any question. Thank you very much for your time. Last call for the last question.
Thank you so much, and very nice to be here, and hope to get more of you to know more about Alpha and also use our products too.
We'll be there. So thank you very much. That's how we stay in touch, and we will write some articles about what you have explained us in order to share with the Spanish community. Thank you very much.